we did a list of transactions. I am not going to do a recap today of what we did yesterday, because I mean I presume that you won't have forgotten, right. So, we did a list of transactions, we started entering out here, and then we sort of stopped at around, if I am not wrong, we started around 19th transaction, 20th transaction we were just about to start. Our 20th transaction we finished. In fact we wrote the drawings by partner, and I explained what is this drawings. 3 forms a partner can draw money from the organization, from the what do you call it as the entity, 3 or 4 forms. 1, they take it as a salary, which is mentioned. Number 2, they take it as a dividend, that is what is called as the profit, gets distributed to them. Quickly settle down, ma'am. Number 3, they take a loan. Number 4, they reduce their capital, they draw from their capital, and in this particular case, since nothing else was mentioned, we assume that it is what is called as drawings. If nothing else is mentioned, always it is assumed as drawings out there. So, we say this, that is where the drawings. So, what happens? Their capital or the net worth is sort of reducing in the process. Have you reduced it from the current account also? Check once again, keep your cursor on the bank account. Reduce 5 lakhs, yes, there is a reduction of 5 lakhs from there, because cash is also gone up. Further, the 21st transaction, if you look at, the following expenditures were incurred during the year 2018. It says postage 1.5 lakhs fully paid. So, what is it? It is an expenditure, goes in expenditure, and then what else? Reduce in the bank account, that is all, because unless until specifically mentioned, it is always reduction in the bank account out there. Just do that. Repairs and maintenance 4.5 lakhs, 40% payable at the end of the year. So, what is the expenditure amount? Oh sorry, 60% payable at the end of the year. No, what is the expenditure? What will go in? Basically the same thing, right? Partly expenditure, partly cash. All of you agree. So, what part will be expenditure? No, what is it that I will write out here? Is it 4.5 lakhs or 60% of 4.5 lakhs or 40% of 4.5 lakhs? How many 40% of 4.5 lakhs? How many of you? Why, sir?
Sir, basically it is 60% is payable at the end of the year. So at present it is considered only 40% is the present expenditure.
Present expenditure, agreed. It is following expenditures were incurred during the year, that is 60% regular maintenance of 4.5 lakhs, 60% payable at the end of the year, fine. As of now 40% is incurred, so you would say that. But let us look at it as end of the year we are preparing, it's almost we are at the end of the year. It will be 100%. Any doubts are for anybody? Right, okay, 4.5 lakhs. Then what else will happen? Yes, sir. Yeah. You can ask me. Nothing with regard to this. No, then you have to discuss after the class. Oh, okay, fine. Fine, 4.5 lakhs. So, expenditure is 4.5 lakhs what he has written out there. Then what else will happen? Reduce the bank account by how much? 40%. Initially it is 40%, sometime if it happens. Supposing the same thing had happened, 40% were due at the 40% was due at the end of the year. Supposing I had mentioned 4.5 lakhs, 40% of it was still due at the end of the year. Then what will happen to the bank account? What part will be liability? 40% will remain as liability. So, what will reduce from the bank account? Beautiful, all of you have got it, fantastic. So, as of now everything is paid at the end of the year, so we will reduce it 100% out there. Please walk in, sir, fast. Now, I said it is payable at the end of the year, we are taking it as of now at the end of the year. So, there is no 0.4, right? It is at the end of the year, that means it is completely paid. Supposing we are done at the middle of the year. So, the purpose of giving this transaction is for you to understand this difference. At that point of time when 40% was paid, 40% is paid, 60% is payable, so 60% of it could possibly, if the entire thing had accrued, would be a liability. That is what, suppose you make that small change in that statement. If you want, you can note it that way, and then we can convert it that way. Instead of say 60% payable at the end of the year, 60% was due at the end of the year. Instead of payable, just make it as due, so that your understanding is slightly better. 60% was due at the end of the year. Instead of payable, cut that payable and write it as was due. Now what happens? 4.5 lakhs as an expenditure remains as an expenditure because it has accrued in that particular year. What is the amount of cash that has gone out? 40% of the cash has gone out. So cash gets reduced only by 40%. Pratik, do it accordingly. 60% is due at the end of the year. So what happens? 60% is a liability. Right? Made that change? Fine. Now clear? Let's move on. Audit fees 3 lakhs fully paid. Simple. Cash or bank, whatever. Normally it's all bank. Bank account reduces by 3 lakhs and your expenditure increases by 3 lakhs out there. Utility bills 2.2 lakhs fully paid. The same thing. Fuel and lighting 3.5 lakhs, 50% payable at the end of the year. Again the same thing, like exactly the same thing. It's at the end of the year we have normally paid off completely. So your fuel and lighting would be 3.5 lakhs is the expenditure. The entire 3.5 lakhs get reduced from your bank account, assuming that it's paid off completely at the end of the year. Carriage inwards 2 lakhs fully paid. Simple. What is the difference between carriage inwards and carriage outwards? Normally carriage inwards is for receipt of the material whatever you pay. Carriage outwards is basically for when the material leaves your factory, that is finished goods leave your factory. So when we normally calculate what is the cost of the material, the cost of the material will include the cost of the material which plus the carriage charges which you basically pay for receiving that goods. That is where we call it as carriage inwards. That is where there is a difference between carriage inwards and carriage outwards. I repeat, sir. Carriage is a very simple term, that is for shipment, whatever it is, movement. There is carriage inwards, carriage outwards. Inwards is paid for receiving the goods, receiving the raw materials out there. Outwards is paid for when you are selling the goods out there. The cost of carriage outwards, if it is borne by you, will become part of your selling and distribution expenditure. There is a head called as selling and distribution expenditure. Whereas carriage inwards, the money that you pay for receiving the goods will get added to the final cost of the material, because what I say material means we talk about always landed cost of material. Am I with you on this? So let us keep that independently as of now. Carriage, logistics is a beautiful broad word. I mean in accounting parlance it's called carriage. You can what is called as dissect this carriage logistics into many components out there. Logistics could include your warehouse charges also possible. Right? Logistics is a little more broader term, sir. Moved on from there, we talked about next is carriage outwards 4 lakhs, 50% payable by the purchaser, completely recovered and fully paid. So what is the component now? If you look at, there are two parts of the transaction. First part, 4 lakhs you incurred, you have paid. Carriage, whatever, that selling distribution, carriage outwards or selling distribution expenditure 4 lakhs out here, and your cash also, cash or bank account also goes down by 4 lakhs, very simple. Second part of the transaction, 50% to be paid by the purchaser. Purchaser has to pay you 50%. So, and that is also recovered, it says. So what happens? Your cash balance increases by 2 lakhs, and on the income side, that is revenue side, you will say carriage charges received from the purchaser rupees 2 lakhs. Sir, how is it an income? He is only reimbursing. As of now, please note, that is the revenue, that money has come in, that is what you are recording. Now, your tax liability will basically be only on the profit, not on the income, unlike in an individual case, right? Please understand that. Immediately, that is not a revenue, why should I pay tax on it? No, you don't pay tax on it. Because 4 lakh you have shown as expenditure, 2 lakh you have shown as income. So what is your net expenditure? What is your actual net expenditure? Logically thinking, only 2 lakhs. That is what you will arrive at. Am I with you on this? Ma'am, not followed. Because, no, that's rude. That's because looking at your face, I could make out that you are confused. Yeah. Yes, ma'am. 2 lakhs is your not income, revenue that has come into you, that has come to you, that somebody has paid. As of now, you have incurred 4 lakhs. 2 minutes, right? Moment you have incurred. Let me finish. Today, what is it? Today is 20th of Jan. My goods are going out. I incur an expenditure. I pay 4 lakhs. Over. Then I raise an invoice to the purchaser to pay 50% of it to me. Money comes in on 25th of January. On 20th of January, what is your expenditure? Huh? On 20th of January, what is the expenditure? 4 lakhs. So what am I recording? 4 lakhs. 25th of January, what is happening? 2 lakhs is, so do I go back and trace the transaction, take an eraser, rub it? No, I don't do it. What do? I just record the receipt part of it. That is what I am doing. One second, I'll come to you guys, 1 second. I am just recording the receipt part of it. That is all there is nothing else in this transaction. See, normally what happens is, there is a problem. Yesterday's class, after that, this 2 lakhs is a reimbursement what we are receiving. Why should I pay tax on it? Why is it an income? It is not an income for me. That is the argument what people give me. We are not looking at an income at all. Income, finally, what happens is, pull the door tightly, ma'am, pull the door tightly. Normally, what we call it as an income per se is, what is the resultant? All your revenues minus all your expenditure. That is what you basically gain. That is the gain out there. And that is where your tax and whatever else is calculated. So don't worry about it. This is all receipt. If I have to put it, use the term instead of income, I will use the term receipt out there. Yes, sir. I've added immediately. Have you added? Huh? Just keep your cursor on the cash. Yes, he has added. Anybody else, sir? Just keep a watch over what he is doing also, right? So that you are also in tune with the same thing. So you should not miss out. Because I am facing this side, so I am not facing the board. So next, packaging charges 7 lakhs, 30% payable at the end of the year. Same thing. We are at the end of the year. 7 lakhs is your packaging charges out there. Expenditure minus your basic total cash out there. This payable at the end of the year sometimes can also be used slightly differently. They would say, instead of payable at the end of the year means we are assuming that it is paid on 31st, that is payable. They could use it like I had sort of indicated in the earlier statement, due at the end of the year. It is due at the end of the year. Due at the end of the year means it is due. At the end of the year it is still due. So then what happens? It becomes a liability part of it for you. 30% dividend was declared on the equity investments by the subsidiary. Now what is that? Funds you have invested as equity in another company is subsidiary. Somewhere, go to the right, go to the investment part of it. Equity investment in subsidiary. They have declared what is called as a 30% as what is called as your dividends out there. So what is it? It's a income for you. Now it is declared. There is a slight difference out here. Dividend declared, dividend received. Now what is happening? Dividend is declared. Income has accrued for you. Yes or no? So income, you add in the income, 30% of that amount is dividend out there, assuming that you have invested at par and everything. Now how is dividend calculated? Any of you? Infosys gives you 100% dividend. 100% of what? I know, sir. 1 second. I am trying to. Sure about it, right? All of you? How many of you say market value? Nobody? That is clear, right? Okay, fantastic. Okay. Well, normally what happens? You might buy the stock in the market at whatever price. The company declares 100% dividend. 100% is not on the price at which you have bought, price at which it is denominated. So even if you buy a 1 rupee share at say 50,000 rupees, and the company declares 100% dividend, all you get is 1 rupee, that is it, nothing beyond that. So, in this case we are assuming that you have bought everything at the face value, right. Let us keep that assumption out there. So, 30% of this is going to be as a dividend, spilling, dividend. Now, that is basically what happens in this particular case, 30% is there. That is an income which has accrued for you. Have you received it? Because it never says received, it says only declared. You declare the dividend in a AGM or after the meeting, but the payment actually happens much later. So, as of today you have declared. So, what is it? What is the corresponding entry for this? Receivable in the which side? Asset or liability? Sure? Clear, beautiful. Now, on the asset part of it, dividend receivable. With you on this, sir? Whatever is the amount out there you have entered, okay, right, straight. Go back, go to the packaging charge. Why are you keeping it as outstanding? You know, it's payable at the end of the year paid. So, don't keep it as outstanding. Paid. Why are you keeping fuel bills, everything is outstanding, I say? Payable at the end, we are preparing this at the end of the year, right? Nothing is outstanding, that is what we said. If it is outstanding, I would have said due at the end of the year, right? Payable at the end of the year is payable, paid. So, take care of that. There is nothing outstanding per se. Packaging charges, fuel bill also, fuel bill, maintenance alone, because we made that statement, fuel bill also, reduce it from the cash part of it. Okay, he will take care of it. Let us move on to the next statement out there. Interest expenditure on borrowings amounted to 2.5 lakhs during the year and were fully paid. Interest expenditure on the borrowings, you have a borrowing. What is the borrowing? There is what is called as your mortgage loan, there is other loan and etc. It amounted to about, what is the amount that is given, about 2.5 lakhs or whatever is the amount I have given out there, it is fully paid. So, what is the entry out there? Expenditure, interest expenditure plus what is called as your cash or bank balance goes down by 2.5 lakhs out there. Where is the liability? Where have I written in the liability? No, even long term liability. If you repay a loan, then what happens? Then liability goes down and bank goes down. There is no expenditure. If when you are repaying a loan is an expenditure, then when you take a loan it is an income, is it? Here you have paid only interest, ma'am. When you pay the principal, yes, liability goes down. When you pay something which is already due on the liability side, yes, it goes down. Right? This just gives you an overview of it. Now, interest expenditure 2.5 lakhs, okay, reduce this 0.00 here. I mean, make it, otherwise it looks very clumsy. Reduce the decimal, no decimals out there. That is why ensure that there will be no decimals anywhere. Depreciate plant and machinery by 5%, vehicles by 20% and buildings by 10% for the year 2018. Now, when we say this is at the end of the year, let us say just go to the balance sheet on top of it. At the end of every transaction, change it as of 31st, balance sheet as of 31st of December, balance sheet as of 31st of December, whatever, XXX. Fine, 31st December, what have you done? What have you done? Huh? What have you done? Pratik, you had a good sleep yesterday, right? Huh? Then Wednesday watch a movie or something? No, right? Saturday, no partying? On the class, day before the class, you are not partying. Please understand, ensure that. No, move. I will do it otherwise. Type DEC, December, that's it. DEC, over. Stop it. Now, fine. So, this is the balance sheet as of that. Now, there is depreciation. Depreciation means what? Reduction in the value of the asset due to usage and passage of time. That is what I said in the first class itself. Now, building, value of the building at the end of the year, because you have used through the year, has reduced by some amount. What is the amount, what is the value it has reduced by? 5%. So what happens? Now just insert a column out here, insert a row out here in this. One second, one by one we'll go. Let us start with building. Building is on top out there. So building is 10% out there. So let us start with building. No, don't insert the entire row. No. That is why I said you have to carefully plan it and then just move this. No, less depreciation, move it that side and sit there. Less depreciation. What is happening? Depreciation means value of the asset is reducing. So what you own in the balance sheet has reduced by 10% as of now. Less depreciation. 10% of that. Right, now add one more row and then get the total out there. No problem, just go there, yeah. %5 is basically what you call it as in your plant and machinery is by 5%, building is 10%, and then vehicle is by 20% out there. Insert a row, no problem. Insert, move down further, yeah. And vehicle spelling is wrong. Okay, go ahead. Make a correction there. Vehicle is 20%. Correct here. Correct the spelling out here. Or else you do one thing, keep the keyboard here and sit here. Right there, turn it around, sit there. Sorry, I have to now keep looking at the board and then doing it. This part of it is fine. Okay, let him take care of the what I call it as the adjustments out there. The company declared 50% of the profits earned as dividends. Yeah. Now that also has to get added in the expenditure. Obviously, it is the value has reduced as of this particular year, whether it is plant and machinery or building or vehicle. That means it is utilized for in this particular year. When it is utilized in this particular year, it is part of the expenditure which has accrued for that year. It is a non-cash expenditure. Please note, depreciation is a non-cash expenditure. So what happens when you say go to the expenditure? Write out here depreciation. Combine all the depreciation of vehicle, plant, and what is called as your building out there. All three put together. Just add it there. It will be, you will show it separately. I can show it depreciation on plant, so much depreciation on machinery. You can add 3 more columns out there. I can just add 3 rows. Yeah, you will always be separate, independently shown out there. With you on this? So now your balance sheet total is not tallying. I know that. We will sort of look at that in a minute because it's adding the other columns also. Can you just do one thing for a minute? One second, sir. I will just do that. Wait, I've still not finished it. Okay. The ones that are indicated in the bold, just go up to the assets out there. I'm sorry, some confusion out here today. I'm sorry, extremely sorry for this. The ones that are indicated in the bold is basically the net value of the particular asset as of December 31st. Normally we show it what is called as, we write it as gross value of building. Please write as gross value of building out here. Gross value less depreciation, and what we write it as the net value of the asset out there. Net value, that is how it is written out there. Net value of the asset out there. With you on this so far? Sorry about the small confusion. That net value of whatever is of the plant. Yeah.
So we normally no other liabilities or fixed assets we are writing down the transaction. Only for this case we are writing down the transaction, that depreciation transaction.
Which one?
The depreciation transaction.
Because I'm just, see, all I do is I can just erase that part of it and write what is the value of the asset as of today, just to show the working part of it, so that you don't miss out. I am writing it this way. Normal standard practice is, yes, gross value, original value is shown, less accumulated depreciation. Depreciation is also basically shown out there. Take care of that, adjust the total, I think, slowly. Okay. Now let's move to the next statement out here. When we move to the next statement out here, the last statement says the company declared 50% of the profits as dividend. We don't know the profits yet. Let's wait. We'll have to match. I think he has to adjust the total, because we had put a sum of all the rows, so he is taking care of it. No problem. Don't worry about it. Yeah.
Net value is the book value.
Net value is the book value as of today. Yes. Net value is the book value. Agreed. Book value normally we don't use for an asset, we use it more for the equity part of it alone. Now, before we calculate the profit, it says calculate the profit as a, dividend as a percentage of the profit. Accepted? Do we know what is the profit? Yes, because profit is calculated, but have we cleared all the transactions? No, there are a lot of things we have left out. Let's go back to transaction number 2. Let's go to transaction number 2. Transaction number 2 says the partners were appointed as what is called as managers at a salary of 1 lakh each towards what is called through the year. Since it doesn't say it is still due, we presume that the salary has been taken. So salary is an expenditure, partner salary expenditure 2 lakhs. Then what happens? Your basically cash or bank balance comes down by 2 lakhs out there. Can you do that, Pratik? You have done that? Partner salary 2 lakhs. 2 lakhs. Have you reduced it from the cash because it is not due still? Do it. Over. This part of it is done. Done, Pratik. Now we move to point number. Before that, somebody said 5. It says that the company issued 8% to 200,000 debentures of 100 each as of 1st of January. Nowhere have we said debenture interest we have paid. We have said that interest of 2.5 lakhs was paid, that could be pertaining to other loan, etc., because specifically the word debenture is not mentioned. Interest on debenture. So interest on debenture is payable, and nowhere it has said that it has been paid. So what is it? As of now, it has accrued. So as an expenditure, interest on debenture 8% of the 200,000 we will write as an expenditure out there. Following? Payable? So payable half yearly. Okay, fine. I didn't read that part of it. Now it is payable half yearly. We have not indicated anywhere that it is paid. You can either assume first half of it has been paid and reduce it from the cash, and the second half may be not paid, then it becomes a liability. If it is paid, it is getting reduced from the cash part of it. As of now, the entire amount is a expenditure. That you agree? Yeah. Am I right, Malika? Malika, right? Yeah. Entire part of it, what is debenture interest? Write it as debenture interest. Amount is small. Debenture interest. Yeah, as of today, let 2 crores or 200,000. 200,000 into 100. So what is called as 200? You have to do this. Just click this column and point A into point A. Point number 8. Obviously full year, right? 8% is what we have calculated is for the full year. Full year it's payable. You must have either paid half yearly. In that case, they should have taken it on 30th, part of it 30th of June and etc. I am assuming it. Let us look at it. At the end of the year, it is still due because nowhere have I indicated that I have paid. My company is a new company. I have defaulted on payment of interest because nowhere in the statement declared that interest is paid. So it is still payable. It is a liability as of 31st of December, the entire interest, though payable half yearly. Penalty will come later. That we will worry about it later, sir. Somebody has to go to the court and file, and by the time he wins, the company itself will be folded out. Now, if you have paid reduce in the bank, nowhere it says it has paid. So what is it? It is still due. So it is a liability. Salaries, if you don't pay every month, difficult to retain the employee, sir. Normally, these things, salary will always be assumed unless until otherwise specified as due. It is assumed to be paid. Same one can say debenture interest also I could assume. Yes, if you do it that way, you are not wrong. You don't have to put in, even if you assume it, you are not wrong. No, assumption is only in the statements out here. In real life, there is no assumption. You know what is happening, right? Because assumptions, without assumptions, then I have to be spend almost about 4-5 hours preparing this, right? And I also like to keep assumptions because that is when I can get different aspects and explain in the class also. That is one of the reasons I also keep some assumptions out there. Yes, sir. If it is half yearly paid, the day on which the transaction happens, you enter it. That is as of 30th of June. If you have not paid, 4,000 rupees accrues as whatever, that 4% of the 200,000 into 100 accrues as an expenditure in the expenditure column, accrues as a liability. 31st of December, still you have not paid that, another 4% of it accrues as an expenditure of that, and then it gets added to the liability. The day transactions happen, you basically enter. With you on this? Now next, anything else? 8th one was what we were looking at. Oh, okay, 8th one salary, sorry. Interest was not entered, only debenture value was entered. What do we go back, go to the library, it says that 8% debentures out there, value of 8% debentures, that is all what I have entered. Out here, you can see that, sir. You adjusted the total on the asset side? Not it? That has been taken care of, he has taken care of that, fine. Now, 8th transaction, machine operators or salary, etc. That is, through the year you would have paid from Feb 1st to 31st of December, let us assume that you have paid off on 31st of December, 11 month salary for machine operators about 10,000 per month and manager 25. So 4 into 10,000, 40,000 into 11 months out there, 40,000 into 11 months machine operator salary, complete salary out there through the year. When it is paid, what happens? It is an expenditure plus your bank balance comes down. Next, manager salary 25,000 per month, 25 into 11, expenditure as well as your bank balance comes down. Yeah, sure, ma'am. Salaries normally it is, if it's, yeah, salaries if it is due it will be mentioned, otherwise it is assumed normally to be paid off. Even the dividend if you had assumed, difficult to retain, yeah. Even the dividend if you had assumed the first part of it was paid off, only second part of it was not paid, perfectly fine. Or if we assumed both are paid off, that is, we would sort of, otherwise normally it will be little explicit. For the sake of simplicity, I have put it as, yeah, total. Employee salary, where is employee salary, where have you put it? Out there, yeah, this part of it, yeah, I have clubbed everything. Otherwise every time, every month you pay the salary, you make an entry. Every month you make a salary, I will say salary for the month of February, reduce on the cash. Salary from the month of March, reduce on the cash. Here I have clubbed everything together.
So in very large organizations, if there are 1,000 employees or 2,000 employees,
Yes.
even their salaries
Of course, yes.
How do they get the complete data?
Whatever you pay, whatever they pay you, that record is there, right? That is the record I accumulate and write. That is where we say whatever to be deducted or added from the salary, they normally say that you inform us before 20th of the month, so that it takes 10 days for us to process, because in that 10 days we will process it. If you inform after 20 years, it will get added only in the subsequent month salary, right? In your organization you would have faced it. Now, 8th part of it is over. Now we go next one to what? Next aspect is what? Huh? 18th part of it. Now go to the 18th. You have invested in a 6% bond. On what date have you invested? September you have invested. When is the interest payable? Biannually. Biannually means September means interest is payable only in the month of September, October, November, December 4, 5, 6. That is February it is paid, right? At the end of February is when it is paid. So as of today, it is received. So as of today, what is the status? Huh? It is accrued. The interest has accrued. So interest on the bond has accrued for 4 months. So it is a revenue which has accrued, income which has accrued out there. On the income side, interest accrued on bond but not due. Not due. When is it due? Due only in February. So interest accrued but not due. Please note. On the receipt side. Then corresponding part of it, where do we enter? Asset. How many of you say asset? How many of you say cash? Asset. Sure. Anybody having any doubt on that? Ma'am? You are following, ma'am? Sure? Fine. Now what happens? On the asset part of it, there is a interest which has accrued, but it is not due, but you are liable to get it next day. So interest accrued but not due, whatever is the amount. Where? Which one? Where is it? It is not, see, it is an interest which you have earned. You are liable to get it. There, miscellaneous expenditure is a sunk cost. I have invested, it is gone. Here, I am liable to get it. Miscellaneous expenditure is I have incurred money on the ad. All I have is 2 ad tapes of Katrina Kaif. When I am going to use it, I do not know. Whereas here it is not that. I have a bond which they have to pay. If they do not pay, I can go to the court and get the money. It is not miscellaneous, it is not an expenditure at all. It is an investment, return on your investment. No, there is, see, as an accountant, I am eligible to get the money. Maybe today, if not today, there are legal processes. So we will, at some stage when I decide to write off, that is when I will write off. As of today, I have not written off. That is what your banks always keep it as huge amount. Why? Because they have not written off. The day they write off, that is why there was a directive from the RBI, if you know that, last 2 years, to clear off all that. So many banks are declaring huge loss. Why they were declaring huge loss? Because they were writing off all the NPAs in the expenditure out there for that year. So then what happens? In that particular year, you declare a huge loss out there. Anybody from the banking industry? So you would know. I mean, I think you can explain it better than me after the class, possibly. Am I with you? So now it's clear. Almost we have completed all the transactions. Now let's see what is the profit out there. Let's go to the profit. Move down. Now there is a profit that you have arrived at. Now in this particular case, I have not indicated any tax per se. Now let me say 20% of the profit, there is, you can add a 27th statement if you want to, and write it as tax and profit is charged at 20% and fully paid during the year. Tax and profit charged at 20%. 20% is quite low, but that's okay, because that is what SOP we are expecting this budget. So let me be positive. 20%, right, on the tax as of today, and completely paid. Normally corporate taxes or personal income taxes are always paid, normally corporate taxes paid always in advance. When you pay in advance, you anticipate a profit and then you pay. So in this particular case, maybe during some based on some calculation, you anticipated a profit, you have basically paid off these particular taxes out there. So whatever is the profit out here, take 20% of it, 20% of the profit as tax. 26th, okay, 26th part of it, will come to that. Of course, yes, the day I pay advance tax paid, I will write it as an advance tax paid in my asset side. But it basically what cash out, that cash that has gone down. The day it has accrued, it goes out of the asset side, becomes an expenditure. Now I go to the 26th statement. Now I go to the 26th statement out there, 26 which I wrote on the board out there. We have said we have sold material, right? We have got what is called as raw material, we have converted to finished goods, we have sold the finished goods. Now do we still own, go to the stock part of it on the asset side, sir? Go to the stock, just go to the stock part of it on the asset side, purchases, yeah. The value of the purchases, just highlight that column as of now. The value of the purchases is shown as 300,000 plus whatever is the amount out there. Now what does asset mean? You own that. Now as of 31st, do you own so much? No. You may not own so much. Why you may not own so much? Because you utilized for production and it would have gone out there. So what is the amount that you own as of 31st of December? That is very clearly given out there. That means rest of it, what has happened to the rest of it? It has gone, it has been utilized. When it has been utilized, where will it appear? It will appear on the expenditure side out there. So normally in this particular case, what happens? Go up, okay, stock of material utilized. Stock of material utilized, special material, okay, special raw material used 300,000 because it says special raw material has been completely utilized. Now stock of the regular raw material, what is utilized? Out there. Original value minus whatever is remaining. What is remaining is only 25 lakhs. So the original value minus what is remaining is what you need to enter out here. What is the value you retain there? What is the value you retain there? You retain the value that is there with you. What is an asset? Asset is what is there with you. What is there with you as of now? Material. Only 25 lakhs worth of material is there. That is all what is there. The rest of it is what has happened. Maybe utilized, maybe damaged, whatever it is gone. It's an expenditure for you. That's what I am writing. With you on this, yeah. We'll come to the building part in a minute, sir. Let me finish this because otherwise I will get digressed a little bit.